Washington, D.C.
Tonight, rein it in. President Trump insists Americans shouldn't worry about recent volatility in the bond market, repeating his call for the Fed to lower interest rates. But with the national debt now at a record $40 trillion, the administration is also trying to rein in borrowing costs, with the Treasury doubling its planned buybacks of longer-term debt. Plus, let's make a deal. The U.S. and Canada reportedly reached a tentative deal that would have tariffs on Canadian steel and aluminum exports cut in half and cut auto tariffs to 15% after an 11th-hour scramble to avoid another trade fight. We've got the details ahead. And looking to November, it's another busy primary Tuesday in the books as a Democratic Socialist stuns the field in Florida's Senate primary as voters set the stage for several key November matchups. And in Alaska, a Senate race taking shape that could help decide control of the chamber. From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Kaylee Lyons. Joe Matthew has the night off. And we begin with breaking news out of the White House involving tariffs on Canada. Joining me now for more is Bloomberg's Tyler Kendall, who is live on the North Lawn. Tyler, of course, we know there was a delay in the implementation of tariffs due to a pending deal between the two countries, and now we're getting some details.
Well, Kaylee, some pretty big news breaking just moments ago. People familiar with the matter telling us here that we should expect to see tariffs cut when it comes to Canadian steel and aluminum exports, as well as tariffs on Canadian autos will drop to 15% from 25%. I had the chance to ask President Trump earlier for an update. Can you give us any update on your negotiations with Canada for a trade deal?
Yeah, we had a very good conversation with the Prime Minister last night, and we've come to a deal with Canada. As you know, the 50% tariffs across the board were going on against Canada today, and they called yesterday and they gave us the points that we had to have. Very fair deal for both.
Is the U.S. going to lower tariffs on Canadian autos or
we're doing certain things. We're got to give something, and we're doing certain things. They were paying a high number. We're reducing it a little bit. It's good for everybody.
Now, Kaylee, as we keep gleaning more details on those metal tariffs, they are not expected to apply across the board. That means that we could ultimately see different rates applied to different derivative products. Also, keep in mind on those auto tariffs, too, this is only related to non-U.S. content in automobiles. That means that 25% rate has only been on that content, and we're expecting that to also translate over to this new 15% rate. We do know that the USTR, Jamieson Greer, had been meeting with his Canadian counterpart today. They did give us optimistic signals earlier, but again, we should caution all of this has yet to be finalized.
And of course, we'll wait for that finalization. Tyler, of course, you also were in the room at a meeting that happened at the White House this afternoon between the president, regulatory heads, and executives from the crypto industry. Did we learn anything new?
Well, if we learned anything, it's that President Trump is really urging Congress to pass that crypto digital asset market structure bill, the Clarity Act. Right now, it's been rather stalled. There has been some relative movement. We do know that there is a vote scheduled on September 15th. President Trump, in part, saying that this is going to be important for innovation going forward. We'll have to see where it ultimately shakes out. He was flanked, as you're mentioning, by some pretty big names in the industry, as well as those top regulators that are trying to put together this, or rather get codified into law, something that would give their agencies the regulatory power over this industry going forward. That includes the SEC chair, Paul Atkins, as well as the CFTC chair, Michael Selig. Kaylee, at this point, we'll see where it goes, but it was very clear that President Trump wanted to get that message through to Americans and lawmakers today.
All right, Bloomberg's Tyler Kendall on the North Lawn of the White House. Thank you so much. And a quick programming note. Tomorrow, Tyler will sit down with several of those that attended today's White House meeting, including the chair of the CFTC, Michael Selig. Tune in for those conversations right here on Bloomberg TV and radio. And at that same event with crypto leaders we were discussing, the president was also asked whether Americans should be concerned about the bond market's recent volatility.
I don't think so at all. I think we have a very powerful country, and we're powering through these ridiculous interest rates. They're ridiculous. Look, when our country is strong, interest rates should go down. When our country is weak, frankly, they should go up. But this country is strong.
This is the minutes from the Fed's July meeting show several officials signaling they'd support higher rates if inflation remains stubborn. All of it coming as the Treasury announces a larger debt buyback program to rein in rising long-end yields, addressing the symptom, but maybe not the bug, with the national debt crossing the $40 trillion level today. Let's bring in Bloomberg's Enda Curran for more. So, Enda, obviously the Treasury with this move is doing what it can tactically to bring long-end rates down, but how much can they really hope to accomplish in the long term if our debt's north of $40 trillion?
It's, as you say, Kaylee, it's a tactical play, a surprise maneuver today, coming in using short-term money to buy back longer-term debt to get yields come down. Now, yields did come down. 30-year yields were down maybe the best part of 10 basis points. That's okay. But the question mark is, how long can that last? Given the fundamental driver behind the higher yields at the moment is worrying about the amount of borrowing that the US government is doing. And we had that figure today making the point that total public debt now is $40-odd trillion. And just a reminder that the US fiscal trajectory continues to head in the wrong direction. It's not the kind of consolidation that a lot of experts say is needed.
Well, especially when you still have higher borrowing costs that are raising the amount of money that we have to pay on that debt. There's also the question of how the Fed's balance sheet factors into this entire conversation. This is, of course, something Kevin Warsh is looking at in the new regime under him. Did we get any clues regarding that in the minutes today, or mostly is the headline here that there were many who thought if inflation sticks that they got a hike?
Yes, there was some discussion on the balance sheet in the Fed minutes today, but nothing that really moves the needle too much, Kaylee. That's going to be a long process in terms of what the Fed officials eventually agree to do with their balance sheet. But more broadly, the picture was officials there do continue to be worried about inflation. They perhaps seem to be more or less content to wait on the sidelines for the moment and to watch the data before their mid-September meeting. When they meet in mid-September, they will get more inflation data, more jobs data. And of course, if we get hot inflation data before that meeting, then a lot of people will be saying borrowing costs are going to go up. And if the data comes in on the right side, then it will take the steam out of that debate. But remember, we could be going to a situation whereby hot inflation, potentially interest rate hikes at a time when bond yields are also soaring.
Well, and when we consider that the Fed's remit is monetary policy, not fiscal policy, and Fed chairs are always very careful to make that delineation, does there reach a point in our debt when we're climbing from $40 trillion toward $50 trillion where the Fed has no choice but to think about it, to weigh in on it? Well,
this is the big worry. People are talking about it. Fiscal dominance is the term. Yeah. Does the Fed have to get involved, work more closely with the Treasury, both work hand in glove to try and keep a lid on US borrowing costs? We're probably not there yet. That has happened in some countries. But at the same time, when you have today this unusual intervention by the Treasury in the bond market, at a time, of course, the Fed is under pressure as well, it's certainly giving a lot of ammunition to those people who say the fiscal story could end up in much closer coordination between the two agencies.
All right, Bloomberg's Enda Curran, thank you so much, as always. Turning now to Florida, with progressive Democrats securing another surprise win in last night's state Senate primary. Democratic Socialist Angie Nixon delivering the upset, defeating Alex Vindman by more than 12 percentage points, even after being outraised 16-1. She'll now face off against incumbent Republican Senator Ashley Moody in November, addressing her in her victory speech.
Ashley Moody and the corporate politicians in Washington, they like to label us. It's easier to try to make voters afraid of me than to defend the choices they keep making to make our lives harder. They look at this movement and they call us extreme. They call us radical. But I think people see through that.
Yes, they do.
I won't let them define me, and I know you will always know where I stand.
Joining me now for more on that race and the other key results from Tuesday's primaries is Bloomberg's Bill Faries. So, Bill, she talked about being cast as an extremist. Is she going to have to become at least somewhat more of a moderate if she wants to defeat Ashley Moody?
Well, candidates typically move more to the center when it comes to the general election, and you're certainly going to have to do that in Florida to win over a state where Republicans have dominated statewide politics for almost a generation now. The big question is whether someone who embraces that socialist label can really make up ground in Florida, where you have a large population of people who left socialist dictatorships to come to the states. You have a lot of people in that situation, Central Florida, South Florida. And the question really will be for the Democrats whether that is a race worth spending money on when they see more competitive races perhaps elsewhere in the U.S.
Well, and it's interesting on socialism as well, as there was other socialists on the ballot. One was challenging the incumbent Congressman Jared Moskowitz, and Moskowitz beat him by, 30 points? So it wasn't a clean sweep. To your point about where to spend money, though, if not in Florida, I wonder if more resources, at least on the Republican side, are going to be directed toward Alaska in the aftermath of its primary yesterday. Mary Peltola, obviously the former congresswoman, is the Democrat in that race, and she came out on top in the primary. What does that signal ahead of November? Yeah, Mary Peltola almost hitting that kind of magical 50% mark, despite being in a race with about a dozen other candidates. So she's at 48%, a 5-point lead or so over incumbent Senator Dan Sullivan. That's going to send alarms ringing in Washington at the RNC. They will have to probably put more money in that to ensure they hold that seat. Democrats are now probably recalibrating where they spend their money and what they think about Alaska. They need to still flip 4 seats to take majority control of the Senate. Alaska was seen as a little bit of an outlier, maybe not so much of an outlier today. And just quickly, Bill, is this the bulk of the really key primaries behind us? Are there any that we still have yet in this primary season? We're past the vast majority. Yeah. We do have a big South Carolina GOP runoff next week with Lindsey Graham's sister, one of the 2 candidates. We have a few other races in places like Connecticut and Rhode Island, but the big races are behind us at this point. All right. Bloomberg's Bill Faries looking forward to that runoff result next Tuesday. Thank you so much. Coming up, former New Jersey Governor Chris Christie has strong feelings about prediction markets. Here's some of my conversation with him ahead. Plus, Congressman Suhas Subramanyam of Virginia joins on the growing political backlash against data centers. It's all next on Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. I'm Kaylee Lines. Turning back to events from the White House a short time ago, where leaders in the crypto industry huddled with the president and regulatory agency heads ahead of the CFTC's inaugural innovation meeting tomorrow. What may be just as important as who was in attendance is who was left out of the meeting. Leaders from the prediction market industry, even though it remains on the CFTC's agenda for tomorrow amid a rapid surge in its growth. Earlier today, I spoke with former New Jersey Governor Chris Christie, an advisor to the American Gaming Association and vocal critic of prediction markets, and asked him whether the CFTC is the right federal agency to oversee the sector.
They're absolutely the wrong party to handle it, and here's why. First off, any of these other issues that we've just talked about, while they're serious as individual cases, they're a distraction, Kaylee, because between 80 to 90% of what the predictions markets do is sports betting. And they are sports books. That's what they are. And these other things are a distraction that allow them to make an argument. But in the end, these are the folks who, as we're getting ready to send our kids back to college, they market directly to college students and call what they do investments. Well, you know, a bet on the NFL is not an investment. And so while these other things, as individual things, the teleprompter case or the military matter, are serious individual cases, that's not why Kalshi, Polymarket, and others are in business. They're in business because 80 to 90% of their business comes from sports betting. They're sports books that are regularly evading state regulation. And they've been found to be operating illegally in many states. In fact, they're operating in a state like Texas, who doesn't allow sports betting of any kind. So these are illegal actors, and this other stuff, while important for those individuals, is a distraction to the overall issue, in my view.
Well, of course, you're familiar with the legal fight over sports betting and getting more states to allow it. That fight went all the way to the Supreme Court. And I wonder if you expect this one to as well. And given the court's current composition, if you feel like the court would actually be on your side on this one.
Look, I was the person who bought Christie versus the NCAA, which established the right for states to permit sports gambling if they chose to do so. That was a 6-year fight. I think this one will be shorter. And I believe when you look at it, 85% now, Kaylee, of the cases, as I said before, that have been brought, the prediction markets have lost. And I don't expect that a losing streak will do anything but continue if they go up to the United States Supreme Court on this. And if that's what the states need to do, that's what they should do. Because let's face it, they've already cost the states $1.3 billion in revenue, in tax revenue, that would have come otherwise to the states, that's being siphoned off by the activities of these prediction markets. And that's serious business in these states. I can tell you as a governor, losing big revenue like that means either programs have to be cut or other taxes have to be increased. And that's only happening because of the selfishness and the illegal conduct of these markets.
You can catch my full interview with Governor Christie online or on the terminal. We also discussed another hot button issue, the growth of AI and the data centers that power it. It's something President Trump touched on in his remarks today as he teased a meeting with the AI industry next week.
I can say if I were the mayor of a town or the governor of a state and I had a chance to get a big plant in, an AI plant or a data center, I would absolutely want it because the jobs are enormous and the money paid, the taxes paid are just enormous. And if you don't take it, you're going to be left behind because there are plenty of places that want it.
And joining me now is Democratic Congressman Suhas Subramanyam of Virginia. He is a member of the House Committee on Oversight and Government Reform. Congressman, welcome back to Bloomberg. You have hundreds of data centers in your district already. Do you want more of them?
Absolutely not. It has created a power crisis in our community. It has created a crisis when it comes to the environment, water usage, you name it. And it has doubled and tripled people's utility bills. And so that's why people across the country are upset about data center development, is because it's being done in a way that's predatory, and it's all about short-term profits. We need community buy-in when it comes to data center. We need to be more strategic and have a plan when it comes to siting, not what's happening right now.
Well, so what should that plan look like realistically? We've heard suggestions of BYOP, bring your own power, which would get to one of the issues you're talking about, the idea that these systems should have essentially the water recycled within them. Are those adequate solutions? Does more need to be done to address those concerns? And if so, is that for you to do as a member of Congress at the federal level, or should that be left to states and localities?
I'm skeptical of bring your own power because I'm concerned about the power they bring. A lot of data centers are saying, well, bring our backup generators, which are diesel power generators. Well, there's a lot of evidence that that is really bad for the health of a surrounding community. Those generators are also noisy and they cause a lot of pollution. And I'm concerned about, the siting of these data centers. A lot of these data centers are siting right next to communities, and the local governments see them as cash cows, but they're not considering the long-term consequences to the community. So what should be done is we have a national strategy where we're talking about siting them in places where there's power that can be provided, where it's not going to negatively impact the community, where there's community buy-in if there is a community there, and build the power necessary to power them. But what we're doing right now is we're going into communities and saying, well, here we go, here's our data center, and local government, here's some money, and doesn't matter what the community thinks, and oh, by the way, you'll have to pay for the power infrastructure on your utility bills. That's not what people want right now.
Well, of course, there's the counter argument, which is if these investments into this infrastructure that powers artificial intelligence can't happen or are curtailed, and therefore the development of AI is curtailed, that we cede ground to adversaries who may not treat it as responsibly, like China. What's your answer to that?
Well, absolutely. I want to make sure the U.S. remains a leader on AI and technology generally. But, I don't think someone who is, let's say, a single mom with 3 kids who sees their utility bill triple cares about the race against China when they see their utility bill, right? I don't think the woman in my community who's seeing a 150-foot utility pole literally being put in her backyard without her say cares about the race against China. That's not a race I want to win if that's what we're coming down to. And we are going to lose this race if we don't have the buy-in of the American people. And right now, the data centers do not. 70% of people do not want data centers in their community. It's because of the way they have approached these communities.
I'd like to ask you as well about a different issue pertaining to technology that the president was focused on at the White House this afternoon, crypto and market structure legislation that may or may not see a way forward in the Senate when everyone comes back from recess. The holdup, Congressman, has been over ethics provisions, specifically Democrats' desire to rein in the president and his family's interests in the crypto space. And I wonder if the Senate is able to sort that out and it comes back to the House. What in your mind, especially as a member of the Oversight Committee, would be adequate in terms of ethics measures?
Right. People are seeing the obvious, which is the president launched a coin, a crypto product and a stable coin product right before he entered the presidency and is profiting from people contributing to that product without any sort of transparency or oversight. And so there's clear conflicts of interest. And all people want is to address that. And I think you can't treat this differently than any other sort of bribe or a contribution to a elected officer's personal interests. So I think it's reasonable to want some sort of oversight and transparency around how the administration, particularly the president, is profiting from crypto products. I think we need to have some regulation in the end. We need to pass these bills. So it's unfortunate we're at this point where this is holding it up, because we need to get this legislation done by the end of the year.
And Congressman, separately, you and a few of your colleagues from Virginia conducted an oversight visit to an ICE facility in Chantilly, Virginia today. What did you see there, frankly?
Yeah, that was a couple of weeks ago, and it was an unannounced visit. Okay. And, you know, we saw conditions that were not great. People were only supposed to be there for a couple hours before being transferred to a permanent detention center. And they've been kept up to 3 days for many months. And it was only until recently, when a court ordered them to stop, that they did. But there were still 9 or 10 people in a cell. They said that they would keep up to 15 in a cell. If you talk about multiple days, that's not great. We also had a woman who ICE pulled a gun on her. She's an American citizen, law-abiding American citizen. That's a pattern of behavior by ICE to go after law-abiding citizens and people who are minding their own business. And this is hurting us from an economic perspective, too. A lot of folks from abroad don't want to visit the United States anymore. They're worried about what ICE would do to them. A lot of businesses are now losing legal permanent residents. A lot of schools are now losing researchers. And I can keep going. It's hurting our economy, and any business owner would tell you that. And so we have to have some transparency over ICE's tactics, because it's clearly not sustainable and it's hurting families and American people.
Well, and you and Don Beyer have announced an investigation into alleged misconduct by ICE. If Democrats retake the House, if you become the majority on the Oversight Committee, should we expect more of that?
Oh, absolutely. I want the ICE officers to come answer questions before our committees. I want ICE leadership to answer questions. Again, the American people do not trust ICE right now, and that is bipartisan. I hear from a lot of Republicans who are deeply concerned by ICE's tactics. To see the woman in Minnesota getting shot, to see my constituent getting a gun pulled on her for no good reason, and to see another one of my constituents who was a Trump voter being pulled over because he was Hispanic and almost detained for that by ICE. That is wrong, and I think the American people want answers for that.
All right, Congressman, we appreciate you joining us, as always. Democratic Congressman Suhas Subramanyam of Virginia, thank you.
Thank you.
Still ahead, President Trump says Americans shouldn't be concerned about the bond market. But does a new, bigger buyback plan from the Treasury signal that Secretary Bessent is? We'll discuss with former Council of Economic Advisors Chair Jason Furman up next on Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons. The national debt officially crossed $40 trillion today, a trajectory that, coupled with higher inflation, had spooked the bond market and sent long-term yields to multi-decade highs. But as the Treasury announced today a bigger buyback program to rein in the long end, both bonds and stocks rallied. And for the details, we turn now to Power Moves with Bloomberg's Nora Melinda, who joins live from World Headquarters in New York. Nora.
Well, Kaylee, the biggest story was in the bond market today. We saw bonds rallying and yields falling across the curve. This comes after the Treasury's plans to boost buybacks of longer dated bonds. This really a signal that the U.S. wants to lower borrowing costs. But what you're seeing a lot of analysts and investors on Wall Street questioning as to whether or not this is actually treating the problem or some of those underlying issues where we still see a lot of concerns remaining as it relates to inflation, deficits, the $40 trillion national debt. But certainly you did see this, of course, affecting treasuries here. If you take a look at yields for the 30-year up, down about, 9 basis points right now on the 30-year treasury yield. And you're really seeing that being emphasized and spilling over into the stock market where you saw stocks rebounding, the S&P 500 and the Dow Jones Industrial Average higher by about 0.2%, but some pressure on tech where we saw the NASDAQ 100 slipping by about 0.2%. So that was the clear laggard on the day. But where we certainly saw a bright spot was in healthcare. And there were some individual movers that we've been keeping an eye on, like Merck and Moderna, that popped up, of course, off of that.
Yeah, I just had to do a double take, Nora. 177% gain on Moderna in a single day.
Just insane. Moderna was the biggest outperformer on the S&P 500, the best performing stock in that index. Now, this run up, of course, did pressure some of the shorts, with shorts on Moderna actually losing about $5.5 billion today. But the big news coming out of this is the fact that Merck and Moderna do have an experimental vaccine that cut the risk of melanoma coming back. This is great news, especially for investors in Moderna that have really been looking to the company to diversify its approach as it looks to push ahead and outside of just being known for the COVID vaccine. It's been spending years really pushing ahead on this effort. So to your earlier point, Kaylee, that triple-digit gain, a surprise to myself as well.
All right, Bloomberg's Nora Melinda. Thank you so much on the big micro story of the day and, of course, on the wider macro picture, especially as it pertains to the bond market. And joining me now for more on that is Jason Furman, professor at Harvard Kennedy School of Government and former chair of the Council of Economic Advisors under President Obama. Jason, welcome back to Bloomberg TV and radio. When we consider this buyback program, the larger one announced by the Treasury just 2 weeks after its initial quarterly refunding announcement, obviously trying tactically to rein in long-end deals. Is it a coincidence in your mind that that was announced on the same day our national debt crossed $40 trillion?
You know, I don't know if markets respond to exact thresholds like that, but certainly big picture, we have an enormous amount of capital being drained by the government at the same time that businesses have an enormous demand for capital for the AI build out. And something has to give. And what's giving is higher interest rates, cutting capital to every other sector of the economy today.
Well, so when we consider what can be done to bring those interest rates down, perhaps the Treasury's move today was able to accomplish that, at least in the short term. But can it go that far in addressing the longer term challenge, specifically surrounding deficit spending? What's the actual solution, the cure to the illness?
Yeah, I mean, there's two solutions. You can cut spending or you can raise taxes, or you could do some combination of the two of those. What the Treasury did today, helped a little bit, but you also put upward pressure on short rates. You're also shortening the duration of our debt, which is a risky thing to do. It makes it harder if we see interest rate increases in the future. And it still leaves rates very high, just not quite as high as they closed the day at yesterday.
If we see higher interest rates in the future, do you expect that is in the near term future when we consider a Fed that in its minutes today signaled a lot of officials concerned about sticky inflation?
Yeah, I mean, there's two things pushing up inflation. One is the pushing up interest rates. One is expected inflation. Now, the good news here is the market seems to believe, and I agree with the market, that the Fed is going to keep inflation under control, but they're going to keep it under control by raising interest rates. And second is just the general upward pressure that comes every time there's a voracious demand for capital. And that's what we have right now. And I just don't think any of those are going to change, short of a recession or a bubble bursting or some bad event like that. Higher interest rates, to me, are likely here to stay.
Well, a bubble bursting is something that continually resurfaces in the market narrative around all of this CapEx and the build out of AI infrastructure and whether or not it's being overdone, whether we're seeing echoes of just a few decades ago. And I wonder if you fall into that camp, Jason, if we are perhaps overdoing it and what kind of economic risks ultimately could come with that.
To me, there's two broad questions. One is, does AI contribute meaningfully to productivity? There, I'm quite bullish and optimistic. I think we're barely scratching the surface of what the current capabilities are in our businesses, and those capabilities themselves are advancing. But then there's a second question, which is, can you monetize it? And in some ways, the better the AI is, the harder it might be to monetize, because you don't need to use the most cutting-edge model for most purposes. You can use a 6-month-old model, maybe with open weights, maybe something from China, and that's going to be putting a lot of price pressure. And we see both OpenAI and Anthropic have been under enormous pressure in their pricing, in their features, and their availability. So will AI work? Yes. Will it work out for the leading companies? I'm less sure.
Well, that's the question everyone wants the answer to. When you talked about the long-term productivity gains and being bullish on them, what is the time horizon you are considering here on those potential productivity effects? Is that a longer-term issue, and where do inflationary effects fall off in tandem with that?
Right. I mean, the problem for inflation is you get the demand first in anticipation of the productivity growth. That's what we're seeing right now with the market up a lot, that fueling consumption, it fueling investment in the sector, et cetera. So this is not deflationary. It's actually inflationary, what we're going through on AI. And I think that it's overly optimistic to think it's going to give us any relief on the inflation side. In terms of when the productivity growth is going to show up, you're seeing some evidence for it in the micro data. I think it might be adding 1 or 2 tenths to productivity growth annually in the macro data. I wouldn't be surprised, though, if in a 1 to 3 year time frame, businesses do a better job of figuring it out, deploying it, and we start really seeing it in the aggregate data.
Of course, there's a whole task force at the Fed that has been charged by the new chair, Kevin Warsh, with looking at things like artificial intelligence and assessing its economic impact. There's also a task force that's looking closely at the Fed's balance sheet. And to return to where we started this conversation, Jason, how should we consider the potential changes Warsh is looking at when it comes to the Fed's own holdings of debt, especially the short-dated stuff, relative to what the Treasury has done today and could look to do in the future? Do these two things exacerbate each other? Can they work together?
Yeah, I mean, that's one of the ironies, is you've had a lot of criticism of, the Fed buying long-dated debt, both from the Treasury Secretary and previously from Kevin Warsh, and now the Treasury just went ahead and did that today. The way you'd reconcile those is say that fiscal policy makers should get to decide the maturity structure of the debt, and then the Fed can only implement that, and maybe that's what will end up coming out of this. I think we're going to discover, though, there's a lot of reasons the balance sheet got as large as it did. It's not working that badly, and if it ain't broke, don't fix it.
But something has to be broken here, right, Jason, if the debt is north of $40 trillion? And I wonder ultimately where you cast... Yeah,
but there's no Fed task force that can cut government spending or raise revenue. That's what needs to happen.
Right. This is the wall between fiscal and monetary policy.
Yeah,
Sorry,
the
continue.
problem is with Congress and the president. They need to fix it. The Fed can only clean up the mess.
Well, do you see that fix on the horizon? Is there any responsible party in Washington when it comes to the U.S. fiscal situation?
I don't see that fix on the horizon. But, one can hope. For example, Social Security has 6 more years before the trust fund is exhausted for retirement benefits. Maybe that will put some pressure on Congress. I'd much rather see that as a forcing event than an even bigger run-up in interest rates than we've already seen.
Yeah, well, the vigilantes potentially have to force it at some point. Jason Furman, appreciate your insight and expertise. Thank you so much for joining us. And still ahead, the emergency Supreme Court decisions we're waiting for that could impact this year's midterms. We'll discuss that and the results of yesterday's primaries with our political panel up next on Balance of Power on Bloomberg TV and Radio.
Right.
The Ballroom project. So what is your plan if the Supreme Court rules against that?
Well, we hope that doesn't happen. I can't imagine it happening. It's a lawsuit that should have never been even allowed to be brought, but hopefully we'll do very well with it. We had a great ruling from a very highly respected judge, as you know, and hopefully the Supreme Court will agree with that ruling.
Welcome back to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons. Joe Matthew has the day off. That, of course, was President Trump today addressing the Supreme Court's emergency docket, where they may soon decide whether to allow construction on the White House ballroom to resume as a series of legal challenges play out. It's one of two major decisions the justices could hand down soon. And joining me now for more is Bloomberg's Greg Stohr. So, Greg, when it comes to the ballroom specifically, there was an appeals court decision that essentially would halt above ground construction on Friday, 2 days from now, unless the president gets the stay he wants from the court. Is he likely to get it?
Yeah, that's exactly right. I would expect the court to act in some way before the end of the week. And, this is a court that is skeptical of the ability of outside groups to press lawsuits. That's really at the core of this thing. Two lower courts said the president doesn't have authority to build this project. It's Congress's right to decide whether it's built. But the underlying question is really about whether this group, the National Trust for Historic Preservation, has the right to go to court at all.
Well, so if it's simply procedural, it wouldn't necessarily weigh in on the merits of the case itself, correct?
That is correct, but because of the way this construction is going,
Sure.
This could be the final decision. The White House says this ballroom is 65% complete. They are working 20 hours a day to move as quickly as they can. If the Supreme Court says construction can go forward in all respects, the White House is going to rush to try to finish it and probably finish it before there's an actual final ruling on whether he's following the law.
Well, it's just incredible. I was at the White House yesterday along with Joe Matthew, and the cranes are moving. They are working as fast as they can, clearly. So we'll wait for that decision. We're also awaiting another important decision that could impact the midterm elections from the court. Could that come Friday, too, when we consider mail-in ballots?
This one could come, but I've been waiting for this one for a couple weeks now. And with every day that goes by, it seems more and more likely the court will not allow this big change. And what this big change is the president had an executive order back in March that, among other things, said that the Postal Service should come up with a list of eligible voters and send mail-in ballots only to people on that list. That would be a dramatic change. Lower courts blocked that executive order, at least the core part of it. And Trump needs the Supreme Court to intervene and let the Postal Service go ahead. But he's also running out of time because the election's only 2.5 months away.
Well, that's what I was going to ask you. Is there a deadline by which the decision realistically needs to be made, or is it just simply Election Day?
The administration told the Supreme Court we need to have this up and running by early to mid-August. It is already past then, and even if the court grants a stay, the Postal Service hasn't even actually issued the final rule, so there's still more procedure to happen before it can actually go into effect.
All right. Greg Stohr covering the court for us, and maybe we'll see Greg back here on Friday if we get a ruling or two. All right, joining me now for more on this and our other top stories today is our political panel. Democratic strategist Megan Hayes, former special assistant to President Biden, and Republican strategist Lisa Camuso-Miller, founder of Friday Reporter Public Affairs and a senior advisor at Rock Solutions. Welcome to you both. Megan, just quickly on this ballroom and the remaking of the White House. This is what we so frequently hear from President Trump about. He gathered the White House press pool today to show them the helipad that he's building. Where do you see the president's priorities less than 3 months out from the midterms?
Clearly not on lowering costs for the American people, being that he continues to spend taxpayer dollars on his vanity projects, whether it's the ballroom or the Arc de Trump that he wants or the reflecting pool. So clearly his priorities are not in the right place for Congress to have, or his party to have a successful reelection. But I think this is very Trump, and I think that this is just what we're going to see for the next 2 years with him.
Lisa, do you agree with that?
Well, I think the question isn't necessarily about whether or not the president has the ability to remake the White House. It's whether or not he has the ability to do it without Congress's say. And that's, I think, the question that everyone in town is really asking about. And whether or not he's got a priority, I think what he seems to think is that he's got opportunities to do a lot of things and he wants to do them quickly.
Well, as we consider things the president wants to do, he obviously wants to see candidates that he endorses win their primary elections. He didn't get that in all cases last night in Florida, Lisa. And I want to get into the Senate race in a moment, in which we saw a DSA candidate win. But he had endorsed Corey Mills, a Republican incumbent, back in February. Today, he says he told Corey to drop out of the race. He didn't say that, though, until Mills lost in his primary last night. How should we read into that?
Look, Kaylee, you and I have been watching this a long time. Megan has been watching this too. We know that the president really likes to win. And so he's always going to make the conversation about how he saw it before it happened, or he's going to wait until the very last minute to endorse a candidate until he knows, in fact, the candidate is going to be successful. The difficulty here is that this is going to continue to confuse the electorate. It's going to continue to confuse the voter. It's going to continue to confuse the candidates, because the president himself doesn't make decisions until the very, very last possible moment about who he wants to support. And the problem is that so many of these candidates really are counting on him to help bring them over the line.
Well, speaking of candidates that made it over the line, a Democratic Socialist made it over the line in the Democratic senatorial primary in Florida in a big way. Angie Nixon dispatches Lieutenant Colonel Alex Vindman of fame from the first Trump impeachment trial by 12 points, despite a massive fundraising disadvantage. Yep. How'd that happen?
I think that she probably played her ground game and was in communities and got more turnout, obviously, than he did. And I just think that sometimes this is when all politics are local. It doesn't matter necessarily that you have more money. It's, are you out there doing what you need to be doing, saying what you need to be saying? And clearly she did. And I also think that this race probably benefited, or she benefited greatly, from us focusing on Michigan and Wisconsin, and no one really thought she had a chance, and it kind of slid under the radar.
Does what she does and what she says now need to change if she wants to defeat the incumbent Ashley Moody in November, or does she stand a chance at that at all?
I don't think she stands a chance at that, and I don't know that the Democrats should put any money into this race and let her say and do what she wants to do. I don't think that that's what the winning message is, especially in Florida. So I'm not sure she has a real chance here.
Well, if Democrats don't put more money toward Florida, Lisa, does that mean Republicans don't have to either? And if it's not there, where should they allocate the resources instead?
Oh, well, I mean, there's so many races to be putting money into, Kaylee. And I think that the thing that we need to remember is that primaries reward intensity, whereas general elections reward breadth. And so that's where I think we're going to probably see that once we get through this primary season, the candidates themselves will start to emerge and grow. But the problem I think I see from my vantage point as it relates to the Democratic Party is, have they been able to figure out how to thread the needle and give an opportunity for candidates to be successful? The problem is that for so long they've been trying to define themselves as different than Trump. But the problem going into the election season is whether or not the candidates themselves are going to be able to overcome the Trump factor in all of these races. And so Republicans are going to index on where they can be successful, where their opportunities are. And I think that there's just too many opportunities in too many different races to really call that money out. I think Megan's probably right. There's going to be a lot of false flags. There's going to be a lot of places where folks are going to want to play ball. Like Democrats are probably going to want to play a little ball in Texas. That still seems to me like not a great investment. There's a lot of other opportunities like that too.
Well, like maybe the opportunity in Alaska. The former Congresswoman Mary Peltola, obviously the Democrat, came out on top in the primary, which, Megan, is structured a little differently. The top four candidates advance to November, but she came away with nearly half the vote with many other people in that race. What signal does that send?
I mean, I think it sends a strong signal that she's a strong candidate. But again, I think this is an anti-incumbency election, whether you're a Democrat or a Republican. So I think that everyone needs, if you're an incumbent, is walking a little bit of a tightrope here. So I think she does have a good chance. I disagree a little bit with Lisa. I do think that Texas is a place Democrats will spend. Tallarico is outpolling Paxton right now because I think Paxton is seen as more of a Trump figure, an anti-incumbent, even though he is not in office. I think that people see him as an incumbent to Trump, and he is polling 5 or 6 points ahead in the last 5 polls. And Gina Hinojosa also is polling really close to Greg Abbott. So it is a place where I think that Democrats will spend money because of the polling. But, you know, I think that Alaska is in play. I'm not sure that Mary will end up pulling it out, but I do think it is in play, and I think it's a strong signal that she did so well last night.
Well, how would you be feeling right now if you were the incumbent Senator Dan Sullivan, not the other Dan Sullivan who was on the ballot, Lisa?
I think it just goes to show that there's a lot of room to run between now and November. And I think that's the one thing that we need to be watching, is that while everyone seems to think that this is going to be a change election, I still think it's going to be very tight. I think that, yes, Mary Peltola is a really strong candidate in Alaska, unlikely to pull it out there. I think that there's another thing to think about, though, too, is that it goes to show that in the primary, you're going to see a lot of activity, whether or not that there's another factor here that I think that we're not taking into consideration. And that is the fact that a lot of people are questioning whether or not their vote really matters or their vote really counts, or whether there's a lot of questions about election integrity that are out there. And that, I think, is going to be the kind of thing that the president himself is going to regret talking about, because I think it's going to leave us with a lower turnout during the midterm elections. And that, in fact, could also work against the Republicans as it relates to what's happening in the districts.
I want to look forward to next Tuesday, which is a primary runoff that's happening in South Carolina. Lisa, this is to replace on a permanent basis the late Senator Lindsey Graham, his seat obviously being filled right now by his sister, Darlene Graham, who is in this race alongside Congressman Ralph Norman. They debated last night. She was asked a question about Taiwan and the South China Sea and U.S. national security interests in that region, and she responded, "National security is not my thing. I'm not that informed on national security." Is that a disqualifying answer?
I mean, yes, but that doesn't necessarily mean that she's not going to get the vote there in the district. I think that it's probably, Kayleigh, it's really hard to say. That's one of those things where, yes, it should be a disqualifier. Absolutely no question. If you want to run for the U.S. Senate, you absolutely have to have an understanding of those issues. She also jumped into this race about 3 weeks ago, and she's probably trying to get up to speed, but that should have had a stronger answer. There should have been a stronger answer about what to say there. And also, too, this is the kind of thing that I'm not so sure that it's going to be the decision that people are making. What does end up being the issue that people vote for when they go to the election, especially now in the ballot box, is about affordability. And so if she had the right answers on how to handle affordability here in the U.S., that to me is more of a qualifier than a disqualifier, because those are the kinds of questions that I think people really want to know about. While they would probably give her a little bit of running room because she probably is learning more about those issues as the time goes on, it ought to be a disqualifier. But most likely it's not going to work against her, though, because like I said, people are going to the ballot and they're going to the polls and they're making choices about people they think that are going to do what they need to do to make the quality of life and the affordability crisis go away in the United States.
We're almost out of time. I wanted to get the chance to ask both of you about this, but the national debt crossed $40 trillion today. Megan, is there any reason to believe that we will halt in any way the climb to $50 trillion?
No, and Republicans want to be the party that says that we're not going to spend money, and the debt has just increased in the last 2 years of the Republican Party. And so I think that, the unfortunate thing here is I'm not necessarily sure that voters are voting on that. I think that that is like a secondary or third issue that people look at. So I'm not necessarily sure it even really matters, because I don't think people grasp the enormity of what that actually means for our future.
All right, we'll leave it there. Megan Hayes, Lisa Camusa Miller, our political panel this evening. Thank you both so much for joining me. And of course, for more coverage on the primaries, on the debt, on all of these issues, you can check out the Washington Edition newsletter on the terminal and online. And you'll find the latest there on U.S. and Canada trade deal as well. Remember, the U.S. is looking at cutting in half tariffs on Canadian steel and aluminum, reducing the auto tariff from 25% to 15%. And we'll have more on that as they march toward a potential final deal tomorrow, right here on Bloomberg TV and radio.